Stablecoins are turning over more than the turnover of Visa and MasterCard. Swift have announced that they're going to create a platform. Swift is the messaging service to banks. They're going to create a platform because they realize the technology that they've got is 60s technology. It's nearly 60 years old. So we need to move with the times and get rid of the feather pens and get rid of these delays and actually realize that we're in a digital, not an electronic world. Banks are not safe. That's why they need insurance. Do you know, I don't think it's always going to be like this. And if you look at the volatility, there's 8 or 9 stocks on the S&P 500 which are more volatile than Bitcoin. I think Bitcoin will, over the longer term, become less and less volatile. And the reason for that is it's becoming centralized. It's becoming owned by institutions. You know, look at the huge success of the ETF funds. I believe the BlackRock ETF fund is their most profitable ETF out of all the funds that they run. So this is an important week. I thought he was going to talk about the New York Stock Exchange, because the New York Stock Exchange last night, strange because it was Martin Luther King Day, so they did an announcement when they had a public holiday, but that's what happens to our friends across the pond. They've announced they want to create a tokenized platform to trade stocks and shares 24/7. So we're now moving into an environment whereby you will be on a Sunday morning when you're reading the papers or having to think, well, I think I'm actually going to go and buy and invest my pension, or I need some money, so I'm going to sort my finances out. You'll be able to start doing that. Now, this is hot on the heels of the SEC giving permission for the DTCC, basically the entity that holds all the stocks and shares on behalf of investors in the USA, and NASDAQ to start creating tokenized securities, public and private. Now, I emphasize public and private simply because the IPO market has been dead pretty much for the last few years. The private equity and private credit markets have had a fantastic time. They've really performed well. You and I, with respect, I don't have a spare $5 million to invest in a private equity fund, but now you can invest for as little as $1,000. And the London Stock Exchange last year, as we spoke at the end of last year, we were talking about this, they created something called the digital market infrastructure. So they're taking a private a private equity fund or a private credit fund, fractionize it, i.e. you can now cut it up into smaller parts, and therefore smaller investors can get access to something which historically only institutions or the ultra high net worth, the sort of people that go to Davos, they can, because they've got 10 million, not a problem. But now the man and the lady in the street can start getting access. So it's this infrastructure. To your question, how do people get engaged? We're now seeing, some of the most reputable institutions. Swift have announced that they're going to create a platform. Swift is the messaging service to banks. They're going to create a platform because they realize the technology that they've got is 60s technology. It's nearly 60 years old. So we need to move with the times and get rid of the feather pens and get rid of these delays and actually realize that we're in a digital, not an electronic world.
Central banks are on top of it, or are they about right, or are they not making a great enough contribution?
I think they're really, really frightened. I think they're really frightened that they're going to give control away to some of the monetary leaders. Go back to the bank. There's not my figures, it's the Bank of America's figures. $6 trillion, 35% of the money supply in America could potentially go into a whole range of stablecoins. But this is nothing new. Again, I know we've discussed this in the past. Back in 1863, 64, you actually had 8,000 issuers of US dollars. Or if you want to go back to let's go back to 1694.
500 years. Yeah.
What happened 330 years ago? Come on, David. I'm going to now put you on the spot.
You are past.
Who's the old lady of Threadneedle Street? Bank of England.
Did it start then?
Bank of England. That's where it started.
Yes, yeah.
But what was also started at exactly the same time as an entity called the National Land Bank. So why am I bringing this up?
No, it's important.
Well, the reason I'm bringing this up is that the National Land Bank basically said, you are legally in this country, it's on our statute, you can buy and sell, make transactions in titles of property. So you don't need to use cash. So the alternative thing was this thing called cash. It was a private company set up by a Scotsman. He managed to get about, I think, just over £1.2 million at the time, which is roughly 200 million now, from about 1,100 investors. And they set up the Bank of England. The Bank of England was a private company all the way through until after the war in 1946.
It was basically nationalised, wasn't it?
And it was basically,
Yeah.
it was basically nationalised. Now we have a situation whereby the Bank of England have passed over the manufacturing of money to the banks. But if you look at the banks and you say, well, okay, David, you're going to talk to your grandson or granddaughter and you'll say, well, okay, you have a choice. You can pop down to your local branch and provided you haven't got too much money, you can put your money in. Because if you've got more than probably a couple of £1,000 in cash, where did you get it from, Johnny? Where did it come from, Sally? Who gave it to you? Okay. And then when you want to take your money out, if it's more than £2,000 or £3,000, what are you doing with your money? Where's it? Oh, and by the way, can you come back in 3 or 4 days' time? Oh, that doesn't sound very good, Grandad. Well, it gets worse. Because do you know what they do with the money? They have bets. They lend it out to companies that might go bust, or they give it to people for a mortgage. Well, what happens if they don't go bust and those bets turn out? Do I get a bonus? No, they'll pay you, if you're lucky, maybe 2 or 3% a year. And if they get it right, they get a nice fat bonus. And the shareholders, the share price goes up. What happens if they get it wrong? Well, it's not your money. It's not my money, Grandad. No, it's not your money. You're a creditor. That's why we have to have an insurance protection scheme. So if the bank goes bust, your money will be safe. There is another very, very big macro tailwind to all this, and that is the 124 trillion, not my number, McKinsey's number, that's going to be inherited over the next 20-ish years. So it's going to go from, with respect, old farts like the three of us,
yeah.
and it's going to go down to our children and grandchildren, who, guess what? They were brought up on, where is it? This funny thing. They are digitally engaged. They know immediately whether that is an Apple or a Samsung or Huawei. They know how to turn it on, what to do, how to do it. They demand 24/7 instant. They will never ever, and you might say they're very lucky, well, they won't be allowed to meet a bank manager because on the whole they don't exist anymore as we knew them. And they certainly won't be meeting a stockbroker. And if I'm correct and we see all sorts of assets trading 24/7, the only way you can do that is through an AI bot. So the education bit may be skipped, because in the same way in lots of Africa, they said, well, let's put in telephone lines for telecommunications. They said, no, we're not doing that. We're going to go straight to cellular. And I think that what we're going to see is that people will want to have a say of their finance, say, this and this and this is important to me, and this is my risk parameters. Right, you go and sort it out. And an AI bot will be trading for them, and it'll search out all sorts of opportunities. And arguably, the financial press and the financial TV stations will become less and less relevant, because I think we're going to see brand is probably going to be on the decline. I don't care that XYZ Bank has been in London for 500 years. So what? Because I can only speak to it between 8 o'clock and probably 9 o'clock and 3 o'clock.